Well, we now have the latest snapshot on the health of the housing market in Canada. The Canadian Real Estate Association has just released its latest report for the month of October. And of course, Scott Peterson is following this story for us. He's going to break down all of the numbers. How do things look, Scott?
They looked a little bit lackluster as we head towards the end of the year. You know, sales are down, prices are down, but, you know, we're still seeing some solid. You know, we're not seeing dramatic declines either way. But let's take a look at the numbers out from the Canadian Real Estate Association this morning. This is a monthly report that they produce every single month. The natural or the national home prices, for example, or sales are down 5.6%. That's month over month. Year over year, they're pretty much flat. They're at 1% since this time last October. So pretty lackluster there. New listings as well for the first month since March are down 2.3%. Month over month, as more people are sort of holding back in what they perceive as a buyer's market, and CREA says they might not return until the spring. Prices probably more near and dear to anyone with a home or looking to buy one. $656,000 is the new national home price. That's up a meager 2% from this time last year. And let's not forget that the record home price was just over $816,000. That's what that graph represents there, as far as you can see the peak there of the highest point of the graph, and it continues to come down, and that's inversely relational to what the interest rates were doing from the Bank of Canada. We saw the interest rates going up 10 times, and hence we saw the prices come down somewhat dramatically, about $161,000 per home. Now, CREA says that these price declines are due to the fact that the Bank of Canada might continue to raise rates. It's still uncertain whether we will have another rate hike or whether they will signal early next year perhaps that rates will come down. Everything is dependent on that. And they're also seeing some softness continuing in the big province of Ontario, where most of the sales take place, but they're also seeing it spread to parts of BC as well. But really, they point their finger directly to the Bank of Canada, that until we have some direction that maybe interest rates aren't going up, we might then see a pop of real estate, both prices and sales, perhaps this spring. Traditional, as you know, the traditional buying season of the year.
Okay, and Scott, also financial markets are up and running. What are you watching for?
We're watching for U.S. retail sales. They were down 0.1%, not as much as people were expecting. And this is an important barometer of the health of the U.S. economy, and for all economies for that matter. 2/3 of economic growth depends on you, me, and everybody else spending. So that's a solid number, and the markets are reacting to it in the sense that they're worried that it's so strong it might potentially tweak the U.S. Federal Reserve to raise interest rates somewhere down the road. But in the meantime, we're seeing the price of oil coming down dramatically this morning, down about $1 a barrel, $77 and change. We have the Canadian dollar flirting right around 73 cents US. And let's get to the rest of the markets, because they're still focused on earnings. Lots of earnings still coming out. We have from Loblaws, their third quarter profit up to $621 million. Metro profit up there in their fourth quarter to $222 million. TSX up 101 points. We have the S&P, the Dow, and NASDAQ also all positive on and after yesterday's rally, where we saw the TSX up 300 points and the Dow Jones up 500 points. So still some enthusiasm for profits and corporate profits continuing to trickle in.
Thank you, Scott.
Thanks, Arthur.